Hello and welcome to the Relax It's Retirement podcast with your host, Josh Leonard, where we talk about transitioning into retirement with intent. I'm Wendy McConnell. Hey there, Josh.
How are you, Wendy?
Oh, I'm good. I'm good. We have our recurring host here, Pete. I can't say your last. Belcastro.
You got it, just like
I,
it's spelled there.
I can say it. See?
Yeah. You make fun of me for Danny Sinowitz, but Belcastro. Okay, I see how it is, Wendy.
I really just like to give you a hard time, Josh. That's really
Understood. And
part
makes
of the
for
fun.
great banter, right?
That's
So, what are we going to be
that's right.
talking about today?
We're going to be talking about life insurance. So, one of the common questions we get from folks is, should I own life insurance in retirement? And to me, I think of life insurance as a form of insurance. So most of us think of life insurance as term life insurance, where as maybe we're starting a family, we get a mortgage, we buy a big chunk of money in life insurance by paying monthly or annual premiums. But much like car insurance, when that term comes up, we don't get anything back for it. It's done at the end of the term. There's also permanent life insurance that covers throughout your lifespan. And there's all kinds of different flavors of it. But in general, permanent is meant to be there until you pass away. It's typically more expensive because you're going to die at some point, right? So they're going to have to pay out on the claim. Whereas term, most policies are never paid out. So it's more in a catastrophe or something really unfortunate. But in retirement, hopefully your children are fully grown and moved out of the house. Probably your house is paid off or pretty close to it. So do we really need life insurance in retirement? And that's the question we're going to be answering today.
Okay.
Yeah, I think once with a lot of our clients that are transitioning into retirement, there's a lot of changes, and one of the things that a lot of people have been doing their entire life is paying these premiums for life insurance. It's like, here, all right, I paid my car insurance, I paid the homeowners, all right, I paid the life insurance, and now we're getting to a point where it's like, okay, I had this thing that was, I mean, primarily designed for if I die too early, right? So if it's, if I need to cover large expenses that, like, I still have a mortgage, or my kids still need to go to college, or, all these things that you you plan for, and I mean, let's be honest, they didn't happen. That's a good thing, right? But now you're in this position where you have to change again. So it's something that we see, like Josh said at the beginning, that a lot of people have this question. Should I keep this, or what should I do? I've been doing it, but it was something that was for the past. So that's when this comes up, is that. All right, now what you're telling me is that I don't have any more income coming in as far as my employment. I'm getting ready to retire, and you're telling me I don't have to pay this, but what if I pass, so it creates some other questions that we're here to help answer.
Yeah, and I think we can break it down to really, four different reasons to own life insurance in retirement. And I think the first one is just covering debts, right? So if you still have a huge mortgage on the house, and maybe that house is the family farm where you want it to stay in the family, well, that's a great reason to have life insurance, to cover that debt, to be able to pay off that debt when your kids or whatever family members inherit that. They don't owe an additional mortgage because maybe they have one on their primary residence as well. So, sometimes to preserve family assets, owning life insurance can still make sense in retirement.
Yeah, I mean, there could be, like you said, there could be a house that could be at risk, or even like a family business. So yeah, there are some things that you definitely want to make sure that you're covered.
Yeah, I think a family business is a great example, Pete, where maybe it's a family business where other family members are involved, or maybe a partner outside of the family, and you want to have a buy sell kind of agreement in place where you can buy out the other partners or liquidate their life insurance is often used in those cases as well, even if you're just more of a passive owner because you're in retirement. That can be a great reason to still own life insurance. Um,
Absolutely. And you could imagine, setting this up ahead of time. Obviously, this, life insurance, you can't buy it after you die, right? It's something that you really have to be planning for, and it's got to be on your radar. And whenever this does happen, and the life insurance does take effect, your family isn't in the best place usually. They're going through a loss of you. And the more that you have set up, so you could imagine that if you did have a family business, if there was other parties involved, trying to come up with a significant chunk of cash to keep that either in the family, or maintain the direction that you want that business to go. That it can be a lot more uncomfortable if you don't have insurance or something set up like that.
Yeah, and I think another common concern that comes in, so, business, this whatever family debt might be there that you want to make sure is covered, that's not absolved when a member of the family passes away. Another one that we commonly hear is like long-term care, right? So I'm concerned that I'm going to wipe out all my retirement savings if me or my spouse needs to go into a long-term care facility. So that higher medical costs. So life insurance can offer benefits there, where a lot of the newer policies can have a rider that cover those long-term care expenses up to a certain amount. Um, Typically, they're pretty well-defined coverages. I would say the benefit of that type of policy versus traditional long-term care is, even if you don't use it for long-term care, the death benefit still goes to your family at the end. Um, Even without the rider, you could use life insurance knowing that it would help replace the assets when you do pass away. So if you spend down all your cash or IRAs, that is another way that you can use life insurance to kind of substitute those assets that you've spent down. I think there was one story that we have of a client who had bought one of these life insurance policies that had a rider on it to help cover them. And we'll use Frank and Lois as their names for the podcast. But Frank and Lois had been married for a long time. Their kids were all grown up, and he was getting ready to retire. And he started having memory issues, and he was diagnosed with early onset Alzheimer's in his early 60s. Frank uh, accelerated his retirement at that point, but all the plans they had to spend more time at the lake house and all those things quickly changed. And luckily, Lois was able to activate the rider to help pay for care for Frank while she was still going to work, or to also have a life to be able to go out and do things. Because as he declined, there was a lot more care needed. Whenever he passed away, the remaining amount in that policy still paid tax free to Lois, so she was able to use that money to continue on with life. So, that's a pretty extreme example. Of course, we never hope to have that, but at the end of the day, that's why we buy insurance, for the things that we hope never happen. But
That's
I
right.
think in this Frank and Lois example of these clients that we work with, I mean, this was certainly something that we couldn't foresee. It's always a risk out there, right? That we have some health issue early on in retirement, but it was really a great backstop for them.
Yeah, it didn't eliminate all of the pain, obviously, within that situation, but
Certainly
if we
not.
can help relieve some of that, and obviously, finances is a big piece that can really weigh on people. So you're already going through a lot. This is, obviously, in that situation, you can see how that greatly can benefit somebody.
Yeah, absolutely. I think, and sometimes people just like knowing that they have a backstop there or some amount of money to help protect this risk. I mean, really, the cost of long-term care is pretty scary if you start looking at it. My grandmother that recently passed away, the facility she was in was over $7,000 a month. My other grandma's in a facility now that's like $9,000 a month. Like, these are not normal expenses, right? I mean, these are people that lived off of a fraction of that their whole lives, and now in the last chapter you're expected to have the assets to somehow cover that. I mean, that's a challenge. And I think what we always say to clients is that the remaining spouse is the worry, right? If one of the two of you needs that level of care where you're wiping out $10,000 a month, in additional expenses, you might leave the spouse poor. So, again, another reason that we might want to own life insurance there is to help protect the spouse, and help replenish assets due to unforeseen illness.
What else do we have to keep in mind or want to consider when it comes to whether we want to keep insurance?
Well, we talked about the unforeseen illness, but I think the other one is what's going to happen to all of us. At some point, we're going to pass away. So, one of the reasons that people will retain life insurance is to cover those final expenses. Some people will prepay for their funeral arrangements and that kind of stuff, but
Well, that way
it's
you can
certainly
make sure you
not.
get what you want.
That's right. We'll get what you want, and also it's one less decision for your family to have to make during a difficult time.
Right.
Sometimes there's discounts by prepaying as well, but final expense insurance is just that. It's typically a lower amount of life insurance that we are setting up specifically to help cover those final expenses.
Yeah,
I would say
usually. I was going to say you can usually get a good idea in your area. If you ask around, obviously it's one of those uncomfortable, one of those things that none of us like to think about. But if you ask around, you find out what what the typical cost for a funeral is. You decide what you want. Make those plans known to your family, your spouse, and it definitely, like we're talking about, this is just relieving a little bit of that, a little bit of stress in those really stressful times of our lives.
Yeah, and I think it matches with what your final desires are. I mean, if you want to have, blockbuster party at the end there with hundreds of people attending, that's going to cost a little bit more than a gathering of, a few friends and family. So
And a band.
And a band, yeah.
Yeah.
I mean,
I
don't know. Wendy,
what's your
okay,
funeral going to be
real
like,
personal
Wendy?
question here, Wendy. What would the band be for your funeral if there was no budget?
No budget. Oh, I
Like
would have.
any band.
Oh, you're going to show my age, Josh, but the members of Journey, including the original lead singer Steve Perry.
Nice.
Okay.
Just hitting that high E the whole time you're there.
Yeah, so I'm going to have to turn the question back on you guys. Josh?
Oh my gosh.
I don't know. I don't actually have an answer, which I knew you were going to come back to me on this.
You're not going to be there, so it doesn't really matter.
It's true. Yeah. That's true. Probably
That's
some.
true. Pete, you got something in mind? I'm sure.
I know. I feel like probably a little bit of a. I don't know. Do you want to make your family feel more uncomfortable or less uncomfortable? I think if they
are you going
they
with
came
like
into
metal or something, Pete?
I was thinking like circus music, but no, it's like maybe some like.
All right, you guys are too
some Led Zeppelin, Stairway to Heaven. Just drag this thing out as long as we possibly.
There you go. Yeah.
Does anybody have anything to say after Stairway to Heaven?
Wendy, that's where my head was going. So I'll throw it out there. Just.
Right.
But it does allow for that control. It does allow for you to, hey, dad or mom already had this picked out. It's already paid for, so you better have Journey there. So
there you go.
All right.
We'll get this to the appropriate parties, Wendy. Don't worry.
Thank you. I appreciate it.
But yeah, I think more so whether it's paying for Journey or Led Zeppelin, which I don't think these are possible things, but it's good to dream. Having that set up where it's financially covered is certainly a help to family. To just say, hey, I want to throw this rockin' party whenever I pass away, and your kids or your loved ones knowing that these are your final wishes, and then they're expected to foot the bill for some big thing. That's kind of tough because settling an estate takes time.
Yes.
Life insurance and cash assets are easier and sometimes quicker to get to help cover. Also, which will bring us into our final reason, is life insurance is tax-free in most cases. So for most folks, unless you're hitting estate planning limits or it's owned by a business or other reasons, life insurance gives tax-free proceeds. So I would much rather inherit life insurance proceeds than an IRA that's fully taxable and has to follow specific rules, like being distributed within 10 years. The life insurance is just like a check with no attachments to it.
Yeah.
Um,
You set it up, you put your beneficiaries on there. So it is very efficient whenever the policy does need to be paid. We know who it's going to, what percentages, and like Josh said, it's not going to create some tax implications in most cases, especially on the estate, or especially for the beneficiaries. They're not going to have to worry about that. In that time, that's why we like to use that funeral expenses as an example. But you can get those funds relatively quick compared to some other places that you might be held. Funds might be held.
I have a question. If I know Uncle Sam the way that I do, he's going to try and be sneaky in some way. Do you have to claim that money if you are a beneficiary as income?
nope. So it is considered as part of the estate. So that's kind of one of the asterisks I'll throw in. I mean, the estate planning limit for this year is beyond
Federal.
Yeah, 20. Hold on, we'll cut.
If you're married and you have grandkids, it's a little bit different. But just for an individual, what are we at now, Josh?
It's like 11.
11 mil, yeah.
I'll pull it here.
And change. But just keep in mind this number that Josh is going to let us know. It doubles, if you have a spouse. So if there's two of you, that doubles. And then you could do things as far as generation skipping, so you can provide benefits to not your children, but your grandchildren. And that doubles that again.
Yeah, so the estate tax exemption per person for 2024 is $13,610,000. So for most folks, that's not going to be a worry. So if you have a $20 million life insurance policy, there's going to be some issues there. But again, for most folks, that's a non-issue. I think in terms of like leaving that tax-free legacy as well, you could also use life insurance to help support things like the family farm, as we talked through in that first instance. So maybe there's not debt on the property, but this property that you want to be retained in the family, you need some assets to help maintain it, right? So to help pay for the upkeep, maybe if family members live out of state, maybe you want to structure that in a way that that's paid for and you're not relying on a consensus of family to agree on everything and pull together funds to fund that kind of thing.
Yeah, it definitely takes a lot of planning, though. It's something that it's not just 1 + 1 = 2 type of deal. There's lots of factors and often things that you just have to try and think of different scenarios. Sometimes it's easy when it comes to a business or a funeral. Just coming with that dollar amount, but there's other factors that it definitely takes a conversation with a few different parties before you should really make these decisions.
Yeah, and I mean, I think there's a lot of different ways that we've utilized life insurance with clients in terms of leveraging that legacy as well. So maybe they have a pension, right? Maybe they don't have much in savings, but maybe they have a pension that is actually paying them more than they need on a monthly basis. So you could buy permanent life insurance and pay into that with some of that excess over time to leave more of that for the next generation. In that tax-free legacy, great. Mom and dad had a big pension. They worked for the government or maybe the school system, and they didn't really have much savings outside of that, but they were able to leverage some excess of that to leave a legacy. That's been a way that we've seen it utilized. You can also utilize it to create a fund for something that you want in the future. So whether it's leveraging it for like an education fund for the family or to donate to charity, that could be an easy way to leverage those assets as well.
Absolutely. Yep. Usually with the right planning, you can definitely make that worthwhile and really make it you know, a great stress reliever, let's just say, when that time comes.
Certainly so. Certainly so. So, yeah, I'd say, the four main areas that we see for people to own life insurance in retirement are just to cover any debts, um, to help preserve family assets, to have those benefits beyond the death benefit. So, to cover things like long term care insurance, also to cover final expenses, or to leave a tax free legacy. And certainly a policy could check off multiple boxes there, depending on your needs individually. But as Pete was alluding to, the important thing is to work with someone that can help you plan and evaluate these things. Life insurance is a tool. As a financial advisor, these are tools that we keep in a toolbox that we pull out as necessary. We don't need, a Phillips head screwdriver to do everything, nor a drill, but having the drill, the hammer, the screwdriver helps us build a total financial plan. And I think that's why we wanted to come on, talk about life insurance today. If you're questioning if you should own life insurance as part of your retirement plan, you're welcome to schedule a 15-minute call with Pete or I. There'll be a link in the show notes to do that. We work with people every day transitioning into retirement, answering these sorts of questions like, how do I reduce my taxes in retirement? Am I going to have enough income in retirement? This is just one of the many questions that we handle all the time. So if you haven't subscribed to the show already, I encourage you to subscribe, share the podcast with friends or colleagues, and always feel free to give us feedback or send us questions that you might be wondering too, so we can do another episode on that in the future. Next week, we'll have a new episode up of How Much is Needed to Retire, where we'll help answer that pivotal question of how much do I need to retire? So until next time, thanks, and look forward to seeing you all next week.